So is the Tesla party officially over? Now in today's video we have a lot to touch on as we got a fundamental update with Tesla as we got the earnings today and the earnings call, and as you can tell from this chart over here, it wasn't good at all, right? It was pretty bloody, and one of the things you want to kind of take a look at over here is that now officially year to date Tesla is back in the red year to date. Now I'll bet it is a minuscule amount. It's, if you round it up close to 1%. But it's pretty horrible, especially when you compare it to the broader markets like the S&P 500, which is up, over 17%. So it's been a horrible year for Tesla. And I kind of want to go ahead and touch on whether or not we have some opportunities, or is just the overall view for Tesla soured up, right? Well, we know that the sentiment, the direction of things looks pretty bad, but I want to go ahead and touch on what are some things that we want to be mindful of moving forward. Now, of course, I want to go ahead and highlight some of the slides that we had in the slide deck from investor relations and kind of just touch on some of the fundamentals for Tesla. Now, it's clear to see that the automobile revenues are down year to date, or year over year, sorry, it's down 7%. And this was honestly kind of expected, especially in this current macroeconomic environment where it's very difficult for many individuals to finance a new car. I mean, even individuals with an 800 credit score are paying interest rates of 10% and over. And so it kind of drives that appetite away from getting a new vehicle. And so that's one of the negatives. Now, on the positives, and this is one of the very few positives, right? Service and other revenues is up, and then also energy generation and storage revenue is up a significant amount. And so that's great. And that's kind of a good thing that you want to see with Tesla. We're kind of seeing the story of, okay, well, the other segments of Tesla are kind of holding its weight and still growing, while the automobile side of Tesla is pretty much declining. Now, of course, that's due to the macroeconomic environment, but you still can't say, well, Tesla isn't a car company when a majority of its revenues comes from its vehicles. I talked about this in previous videos. I think it's roughly around either 70 to 83%. Somewhere along the way, I have to do the math again, do the calculations. But regardless, a majority of the business comes from sales of its EV vehicles, and it's still a car company. Now, I'll bet it's still growing in its other segments, but currently we're in this odd situation where its main core business is falling down and everything else is growing, but it's still not at that area where you could kind of say, well, it's not a car company just yet. And I know some individuals will get upset, but I want to go ahead and touch on a couple of other things as well. Now, of course, we could further on see that deliveries weren't well. I mean, it's not that hard to see. When you look at the Q2 quarter of 2023 and you do the comparison of what the deliveries are now, I mean, we're down. It's not that hard to see. But again, that's part of the macroeconomic cycle. And the idea is that hopefully, once we are out of this environment, we could eventually get to a position or into the business cycle where people are more comfortable with buying cars. But of course, that's going to take some time, because just because rate cuts or rates start getting cut, that doesn't necessarily mean that, okay, automatically people start buying cars. Because guess what? What ends up happening when you have rate cuts taking place is that, yeah, we'll start to see interest rates fall down, but they're falling down because they have to stir up demand because the economy is weakened. And so just because rates come down, people won't have money for a while, right? That's just how it goes. You tend to have either a mini recession or some sort of recession once the Federal Reserve starts cutting rates. Something you want to be mindful of, right? It's not like, oh, okay, the Fed starts cutting rates, things are good. No. It takes time, right? Just like it took time for the business cycle to go ahead and impact Tesla and of course, harm its deliveries and its sale from its EV vehicles. But something else is that I want to highlight, and this is something that Tesla highlighted itself on its slide deck, is that our non-automotive business is becoming an increasingly profitable part of Tesla. And we see here that if you extrapolate it, this is good. This is good news. We're seeing this trend go upwards, and that's absolutely great news. But the problem is, it's still not a majority of Tesla's core business. And so that's kind of like the theme of today's video, right? Tesla's core business is kind of in trouble. Even if rate cuts take place, it's going to take a while for things to take place. And I want to go ahead and talk about some of the notes from the earnings call, which kind of are bad. And I want to go ahead and touch on that. Now, I have this screenshot over here. I thought it was funny. They talked about Optimus and how Optimus is over here in the factory moving batteries. I hope no one got excited for this. This is not anything of any substance. I mean, for all we know, he's probably just not even doing anything that's really doing any impact for the factories. I mean, he's probably just lifting up batteries and putting them in a box. We'll go ahead and touch on Optimus. I think there was a pretty interesting point that Elon made that I disagree with, and it's kind of putting me off on Tesla, and I may have to actually trim and rotate my long-term portfolio. Now, for those that are familiar with the channel, I am a long-term investor, right? I do have exposure to Tesla in my long-term portfolio, but I also have a short-term trading account where I trade Tesla as well, right? In my long-term portfolio, I may have to do a little bit of rotation here, but let's go ahead and move forward. Now, over here, we have the statement of operations, and one thing that was pretty interesting, right, and it's actually concerning, is automotive regulatory credits. It's making up we take a look at, automotive sales, right? Automotive sales, okay, it's up there, but as far as like regulatory credits, it's still a huge part of Tesla's business. And one of the questions that were mentioned in the earnings call is, hey, Trump mentioned, or, Vance, right, the running mate for Trump, has mentioned about removing these these credits for these EVs. And Elon Musk says that, yes, it will hurt Tesla in the short term, but in the long term, it's going to be great because it's going to burn their competition. But be mindful that in the short term, it's going to hurt Tesla a lot as well. And so that's something that I kind of want everyone to be mindful of when you take a look at this. I mean, look at this. 800 and of course this is this is in terms of millions, but 890 in comparison to the previous quarters over here. So we see that regulatory credits, I mean, it's pretty much the crutches of Tesla, and if that goes away, well, that kind of puts us in grave danger. Now, something else I wanted to talk about in regards to the balance sheet, right? There's a couple good things. Now, the cash and cash equivalents, well, that's good. It shows that there's kind of some health in regards to Tesla. But one of the things that maybe a lot of individuals are overlooking, and again, I try to really just parse through these, financial statements and try to look for things that individuals are not paying attention to. And one of the things is inventory, right? So we see here inventory, and this is not great, right? Because we're seeing that inventory is kind of high up there. It's not falling down. And the concern with that is that we may have just this difficulty to remove inventory from the Tesla fleet. And of course, that's bad. Now, of course, I don't want to just bash on Tesla, this entire video. Of course, there's some positives. Like I said, cash and cash equivalents are good. Total assets, that's good. We have some positives and some negatives. Now, I want to go ahead and just kind of go into my notes here, and don't judge me on the notes. I just went on OneNote, Microsoft OneNote, and just took notes as Elon was speaking, as the earnings call was taking place. And of course, we'll go ahead and delve back into the charts and talk about a couple things. I know a lot of people love to hear my perspective on technical analysis in regards to Tesla, but I want to go ahead and touch on some of the notes I took here, right? And again, these are just quick notes I took. It's sometimes hard. I hate kind of rewinding the earnings call, so I just try to type as fast. So if there's typos, just ignore them, right? So EVs discounted in the market short-term hurt Tesla. So Elon Musk mentioned that, there's a lot more EVs that are discounted now in the market, and that's hurting Tesla. And it's kind of ironic because, Tesla kind of started the EV pricing war, and now we're seeing it kind of hurt Tesla as well. But he mentioned that this is just hurting Tesla in the short term. But nonetheless, I think this is still going to be a long-term problem, in my opinion. You guys can let me know in the comment section down below. Now, he did say that they're going to be releasing a more affordable model next year. That was pretty interesting. Now, of course, during these earnings calls, we tend to hear Elon Musk not want to reveal too much of any other products in the products line or in his product stage, just because he wants to reserve those for events. So we don't have any details, but he did mention that. But I don't want anyone to get overly excited about that, because there's a lot of promises that Elon made that we haven't seen, right? And in the next line over here, right, we talk about the promise of FSD. I mean, every year it seems like Elon Musk says, "Oh yeah, this is the year where we get closer to solving fully self-driving." And he mentioned how version 12.5 is 5 times more, it has 5 times more parameters of version 12.4. But this is the same spiel as we hear every year. Okay, it is improving, but are we gonna have a time where we actually have unsupervised fully self-driving and robo taxis actually being a thing? Well, it's getting pushed back, just like the robotaxi event, which, by the way, we actually got confirmation of a date, so that was pretty interesting. He mentioned that the event is October 10th. Before, we were just kind of left in the unknown of it being October, but now we know it's October 10th. But he mentioned that the reason they had to push it back was, and this was very vague, I wrote like a little asterisk over here, vague, that they just had to add more things for the product unveil. So very vague. We don't know anything more about what the robotaxi event is. We just know that they had to push it back because they had to add more things for the unveil. So that's one of the things. At least we got a date, right? Not left in the unknown. But one thing I think was interesting, he mentioned that 2026 Optimus will be rolled out to customers. I don't think that's necessarily going to take place. And maybe I might have misinterpreted that, but I don't believe that this Optimus is close to even being rolled out within 2 years. But again, you guys can let me know your thoughts in the comment section down below. Now, we know that Elon Musk during these earnings calls, he tends to be like a hype man, right? Of course, he's the CEO of Tesla. He wants to, of course, talk well about the company, right? It's very hard to be honest and talk about what's actually being bad. But he mentioned how they had this valuation of Optimus all wrong, and that Tesla is going to far exceed the valuation that ARK Invest has by just by a far amount. I'm not sure what amount he mentioned. He might have mentioned just like a specific number, maybe it's 10 times, but this was very bullish of him to say, but I think it's kind of the equivalent of like just nonsense, right? And the reason I say this is because ARK Invest has been throwing out huge numbers on the board for years, and they've been wrong for years. And let's go ahead and actually toggle over. Let's take a look at ARK, right? Let's actually look at ARK from a monthly view, right? ARK Invest had, a little great time maybe during 2020, during the pandemic, where a lot of the companies did well. Like it was, holding on to Zoom, which was a large holding, and Tesla, which did really well. But ARK Invest pretty much died in the bear market, and they haven't done anything. There's been articles from, I think it's the Wall Street Journal or maybe the New York Times, saying that ARK Invest has been a wealth killer, where individuals who've placed or invested their money with ARK Invest, one of their ETFs, have lost a significant amount of wealth in comparison to just putting something into the S&P 500. I mean, just the S&P 500 has outperformed ARK Invest by a significant amount. And I know it's hard to beat the S&P 500 on a consistent basis, but the point is that ARK Invest has been throwing out these crazy numbers for a long time, and they've gotten lucky, during the pandemic, but we haven't seen anything else from ARK. And, fingers crossed, maybe one day Cathie Wood will, blow our minds again. But at the moment, Elon Musk saying that, hey, the numbers that Cathie Wood throws out and ARK Invest, they're far below what I believe. I think that's just kind of just hype, bubble nonsense. But again, he kind of has to do that. Now, going back to the products, right? We don't really get much of like the product updates, right? He mentioned one of the analysts asked about the role. It might have been an analyst, and it might have been just a general question from investors, but the Roadster, when is it coming? Now, he mentioned that they still have some updates to do, but it's going to drop next year. Now, me personally, I'm not too excited about the Roadster. I don't think it's going to contribute much to the Tesla lineup, simply just because I think it is a niche product. And it's just something that I think a lot of individuals who are Tesla fanatics kind of want, just like the, modified Roadster. That was the first, vehicle, and then now they're kind of reintroducing it. So I think it's just like a niche product. Not as niche as, some may have said for the Cybertruck. But I'm not too excited about this. But again, we didn't get any updates on this. Now, here's something that I think was very telling about NVIDIA, more so than Tesla. Now, Elon Musk said that he's going to double down on the Dojo supercomputers, and he sees that as being a path to being competitive with NVIDIA. Now, the problem I have with this is that in one of the recent earnings calls, we've heard Elon Musk say, oh, we're not going to really work on Dojo. It's kind of not something that we're really focused on. It's a side project. And now we're hearing, well, okay, there's so much pent up demand for the Nvidia, chips over here that the prices are gonna have to obviously go up. There's a lot of demand, so Tesla has to double down, and that they will succeed on it. And so it's kind of like this back and forth where now we're seeing Elon Musk kind of say, well, Dojo is not a side project. It's actually something that they're going to work on, and they're gonna, succeed with it, even though it may be challenging. But it's kind of more telling about Nvidia, in my perspective, of how much demand there is for Nvidia. I'm glad to hear that, especially as I do have exposure to Nvidia in my long-term portfolio. Nvidia was something that we've taken some trades in within the Push and Profit private group as some swing trades within the trading account. I mean, if we take a look at Nvidia, absolutely killing things, right? But let's go ahead and kind of focus back on Tesla, right? Just a couple more things. Now, here's something I think was another really hype topic from Elon that I don't necessarily subscribe to. Now, they asked about, and this was one of the analysts, I'm not sure from which financial institution, they asked him about Optimus, so robot, and what's his expectation for like the total addressable market for it. And he mentioned that, well, there's 8 billion people in the world, so everyone will want one. And so on top of that, when you also combine the industrial perspective into it, that there's going to be a huge demand, and that they're going to have over 20 billion units of the Optimus bots, in the future. Now, I mean, it's very easy to say, well, in the future we're going to do this, and that could be 30 years in the future. But I just don't like the way he mentioned, well, hey, there's 8 billion people in the world, and everyone will want one. So let's just say that's 8 billion right there, and then plus what the corporations will do with it as far as purchasing these robots. That's not very fair to say, especially when you consider that a lot of the population, or a lot of the parts in the world that have this huge consolidated let's think of India, right? India has a huge population, right? It's in the billions, but realistically, can everyone in India afford to purchase a Optimus robot when it comes out, regardless if they bring it down to 15,000 or and then let's say even 10,000, right? That's not a very likely scenario, and I think that was kind of just odd to say. Just because there's that many people in the world that everyone would want one, so that means, okay, we'll just say there's 8 million there plus everything else. That puts us at around 20 billion plus. Again, think about that, right? Some of the parts of the globe, and I'm trying to think of the right way to say this, that have those huge populations. Well, there's a lot of poverty in those areas, is what I'm trying to say. And so you can't really say, hey, well, there's 8 billion people, they're all going to want one, they're all going to buy one. A bit odd to say. Now, again, someone said, if Trump wins and the tax credits are gone, how's that going to impact Tesla? Now, Elon said, well, in the long term, it's going to help Tesla, but we all know that in the short term, it's going to be very harmful for Tesla, especially when we look at those EV tax credits. That's not good, right? That's gonna do a lot of damage for Tesla. And so, that's kind of just my view on what the earnings call, how it kind of unfolded. And that's not only just my perspective. I mean, the market speaks for itself, and you see that there was a lot of selling taking place. Let's go ahead and go to a 5-minute view, right? So it's not just me saying, oh, I don't like what I heard from this earnings call. Obviously, people put their money where their mouth is, and a lot of market participants, they didn't like this earnings call, and we're at an area, right? Let's go back to a 4-hour chart where we're getting rejected by this descending trend line, and we have to be mindful is that this is a descending trend line that we've had for the last 3 years, which is why every single time Tesla got close to this descending trend line, I provided a bit of a warning. Now, recently I shared how, hey, if we have a good earnings and we break above this, descending trend line, we could finally, have a nice little short squeeze, and that could push Tesla stock upwards. That didn't happen, and that's why I was waiting for the earnings. Now, we broke above it recently, but then we ended up having the bad news of the delaying of the the robo taxi announcement, as well as a couple of other factors that contributed to Tesla falling down. But I was hopeful that, with Tesla kind of consolidating and bouncing around over here, that we could hear some positives from the earnings call and from the earnings, but it was actually the opposite. And so we're seeing this huge rejection, and something that's concerning is that we're in this area where there's very little volume relative to price. And so with that selling pressure now, if it continues, well, that could push Tesla stock down fairly quickly. And if we could even go back to the 190 area, that's not even out of the question. I know when I talk about those big moves, people say, no, that's impossible. But we have to be mindful, right? When there's little volume relative to price, and if there's buying pressure, well, that pushes up the order books. And that's why you see those big moves up. That's why we saw Tesla stock. Let's go ahead and measure this. We talked about this. Tesla did over like close to 40% in just a matter of a couple of weeks. Now, when you have selling pressure and little volume relative to price, it does the inverse where it pushes down on the order book pretty quickly. And that's why today alone, we fell down. I think this was kind of what the options were expecting. I think it was like roughly 8%. Actually, it's a little more than 8%. So yeah, if we continue to have more selling, that could be bad for Tesla stock, and we could easily see it get back to this 190 area, which is not good news. Now, of course, within the Push and Profit private group, I talked about how we may have some opportunity. Well, actually, we'll leave that for those within the Push and Profit private group. I want to keep this just specific for Tesla. You guys in the comment section down below, what are your thoughts on Tesla, both in the long term or even just in the short term? If you're trading Tesla, what are your thoughts? I always love to hear just kind of your opinions, as even if we may not agree on some things. I always like hearing the just the opposing opinion, right? Because of course I like to just kind of combine my perspective with everyone else's, but ideally, this is not a good earnings for Tesla, and we may end up seeing the broader markets. Let's take a look at SPY actually pushing up if we have a good rest of the earnings season, right? But Tesla may just kind of deviate, just like how we've seen Tesla deviate from the rest of the market for this entirety of the year. But again, I don't want to make this video any much more longer than it needs to be. Hopefully you guys found some value. And before you guys go, make sure to watch this video right over here where I break down the history of line charts and how they have some utility when it comes to, evaluating stocks from a technical perspective. And I'll see you guys on that next video. Take care, guys.